And money is now not being treated very well in the West. And then when you add on top of that sanctions, a third of the world is sanctioned, a third of the world is fiat sanctioned, and then that leaves you a third. There's a reason why a lot of money is looking for an alternative financial system. Now, the alternative financial system may be going back to gold, but I think it's much more likely to be in a kind of digital.
If you're finding value in what you're watching, consider hitting the subscribe button and turning on the bell notification. Oh, and don't forget to drop a comment. I love hearing your thoughts and ideas. By the way, we have got a ton of other videos waiting for you. And if you are ready to level up your mindset, come hang out with us in our private Facebook group called Mindset for Business Success. Hello and welcome to Super Entrepreneurs Podcast. Today we have with us Will Nutting.
Correct.
An experienced investor who's been navigating global markets since 1990s. His investment newsletter has over 2,000 subscribers, which includes CEOs of some major financial institutions and founders of some of the most exciting startups. So I'm very much excited to talk to you today, Will. Welcome to the show.
It's great to be here. Thank you for taking the time.
No, my pleasure. And thank you for taking the time. So 1990s, that's a big time frame that you've been involved in investing. Can you share how you've seen the market shift? And what was that one big trend that excited you the most?
Listen, I think the big trend that's happened in the markets is a little bit like the trend that's happened in society today, which is that the ability to be present in the present as a result of technology becomes more and more difficult. And so I think when I look at the financial market, what really drives financial markets? When I started in this business, it was a world of faxes and FactSet and the concept of electronic trading and momentum and quantitative models didn't really exist. And so I think that today, one of the battles you have, and you're seeing it with financial markets today, is that the machines make markets quite lazy. And what happens is that the markets can get away with performing by focusing on a remarkably few amount of very large stocks. And so what's interesting is it's becoming, despite the fact that technology has given everyone an iPhone or a smartphone in their hand, they can go and do the work on micro cap, small cap, special situation stories. On the whole, what really happens is that actually people's entire focus is on mega cap stocks, because that's really where the whole momentum is in the machines. And so I think there's this slight irony where everyone has more and more information on their phones, more and more information from Google and ChatGPT and all the other such things. And actually what happens is that all we end up doing is have a market that's driven by a dozen stocks, 7 or 8 stocks in the US and 7 or 8 stocks in Europe. And so I think that I've seen that trend.
Good point.
That's one of many trends that I've seen evolve. So what we try and do at Nut Stuff is have a view and have some perspective on mega cap stocks and what's going on, but also trying to look at the places of the market where the machines either can't be or simply aren't. And I think if you can get ahead of the machines, then I think it's really interesting. I look at it like a bucket of water, a pint mug of water, and a shot glass of water. And if all the market capitalization is in the mega cap stocks, the moment that people cool on mega cap stocks, then you get this hugely disproportionate. Sorry, I'm just going to have to get rid of that. You get a telephone going in the background. Sorry, that's probably much you're recording up. Then you get this hugely disproportionate move of assets into smaller stocks. And so the real opportunity, as I say, is to get ahead of the machines, find places where you've got stories, points of inflection, really interesting global thematics. And then where those thematics are really relevant, suddenly you can end up having real asset flows. So I would use an example of uranium as a classic example of that. Parts of the energy stack, cannabis, marijuana, etc., which are all sort of places that we look at that are not really where the bulk of money and assets are focused.
So would you say that your way of looking at investment is broader than anything that's on the market now when it comes to machine?
So I describe my way of looking at investing as LOFTW, which is look out the fucking window. Okay. So I
Yeah.
think simplistically that in the time that I've been doing investing, the thematics, the ideas that have really made a difference to me is when I've actually looked out the window and tried to understand what's going on in the world. And so I'm happy to give you a quick synopsis on that if you want to. But simplistically, that's how I've come to some of the focus and some of the ideas where in the last
Please
few years
do.
we've made real money. So
Please do, because it could help people.
So I think simplistically, where the world has got to in the last 20 years is money was free. And in that environment, obviously, I think the Western governments used foreign policy to ensure that inflation was kept benign. We ensured we went and got energy from far off places. And on occasions, we waged a few wars just to ensure that we kept those far off places under control. And we got our energy and we kept inflation low, we kept taxation low. And then what happened is in the last 10, 15 years, debt's really begun to creep up. As debt's crept up, technology has opened everyone's eyes domestically in Western economies, but also in the rest of the world. And what's happened is that expectation and aspiration and entitlement has gone up in society. And so now I think in the West, you have a heady cocktail of indebtedness, entitlement, combined with really bad demographics. And when I say bad demographics, very low birth rates, aging populations who use 90% of healthcare in the last few years of their lives. And that level of entitlement in society has meant that governments have had to do things and behave in a foreign policy perspective and a domestic perspective where they've increasingly got to go where they can get the most bang for their buck to get money. And money consequently goes to where it's treated best. And money is now not being treated very well in the West. And then when you add on top of that sanctions, a third of the world is sanctioned, a third of the world is fiat sanctioned, and then that leaves you a third. There's a reason why a lot of money is looking for an alternative financial system. Now, the alternative financial system may be going back to gold, but I think it's much more likely to be in a kind of digital world where we're so comfortable having our lives. If you have your dating, your food ordering, your therapist, your pet therapist online, why won't you have your money? Why do you have all your money on your phone? And so I think this emergence of this alternative financial system, especially in a world where 95% of the world or 90% of the world now has access to this technology, suddenly becomes a very interesting alternative financial system. And that's why gold is going higher. That's why crypto is, the digital assets are having a focus. And that's why AI and such like has had the big focus that it's had.
Do you focus on crypto as well?
I focus on digital assets a lot for the reasons that I've just articulated, which is I think it's trying to identify not digital assets for the sake of digital assets, but I think it's more trying to understand
convenience.
It's convenience, but I think it's the differentiation inside digital assets now of the kind of NFT meme coin world and the tokenization of real world businesses that frankly operate and function better in the crypto and digital asset world.
So can you share your wisdom to people that find investing intimidating, especially with what's happening in today's market? How do you make it feel more approachable to them?
So I always ask this question of my friends' children. I say, if you were at an airport and I took away your mobile phone and your iPad, and you had to go into a news store or a bookstore, what 4 books or magazines would you buy before you got on a long flight? So the first thing I think is to understand what your passions and what your interests are. Once you've got your passions and your interests right, then I think you sit down with a piece of paper and you think along the lines of Maslow's pyramid of needs, right? Wants versus aspirations. You think about all the stuff you need. And then I think you have to start thinking about building a portfolio of ownership of whether it be stocks, whether it be physical assets, whether it be whatever it may be. And so when I think about it, is I think human nature is to be focused on the things you're most interested in. And so therefore, I think what you've got to do is I would say, if you have an understanding of politics or history, then I think you can build a portfolio around your vision of society, politics and history, passions, interests. But I think it's top down, bottom up. But when it comes to actually the stock selection piece and the equity and the equity piece, then I think that can be very much based around stocks and ideas and things that you really have a personal interest in.
So would this fall under your concept of common sense investing as well?
I think it's common sense. I think it's common sense investing, and then with some very basic financial analysis. And then I think you have to put the common sense into perspective of how consensual your stance is. And then, as I say, I think it's not being contrarian for the sake of being contrarian. It's more a case of how undiscovered is your perspective on something, and do you have a differentiated perspective on something?
And that first question that you ask, right, when you're going on to boarding a plane for the magazines that you would pick, would you feel that the starting point is coming from the human intuition more than any?
I think it's as complicated as that. I think it's how intellectually curious are you? How much do you want to do something? If you have some money, if you have $5,000, $10,000, how much do you really want to do something with it? 7% a year, which is the long term. I think with dividends is the long-term return of the S&P, 100-year return of the S&P. 7% a year is double your money in the next 10 years. Now, I don't know what your viewers or your subscribers think, is that most of the time, if I took the money I had and I doubled it in the next 10 years, it doesn't get me to that exciting a number that's going to really change my life. So I think you've got to be willing to swing for the fences a bit more with cash. And therefore, when I look at a portfolio of assets, I'm happy to have a higher risk, higher return tolerance.
Yeah. Make it exciting. But you would utilize your intuition as well, your gut feeling when you're going about creating those big jumps.
It's a story, isn't it? I think what Nut Stuff does, which is what I write twice a week, and I publish our portfolio on a Monday. So people could, and I don't publish the fund because I want to run people's money. I publish the portfolio because I want people to see that we're opinionated, we're thoughtful, we want you to think and question, but we also eat our own cooking. And I think it's very important that you eat your own cooking. And on occasions we choke on it. We choke on it as well. As I say, I think it's about being thoughtful. But again, I go back to it. It's about how passionate are you? How interested are you in understanding the story and the narrative of the market? And I think it's, whether it be trying to get your head around the presidential debate last night, whether it be about trying to get your head around a Chinese slowdown, whether it be trying to get your head around the concept of escalating military situations, I think all that stuff has a really incredibly interesting bearing on what's going on in the world and also what's going on in markets.
Yes, for sure. So when you're looking at people or ideas to invest in, can you share what stands out to you most? What do you look for exactly?
I think primarily in equities, I think the equity market is really it's about stories and it's about flow. And I think increasingly, to go back to the conversation that we had at the very beginning of this, with so much technology, with the active idea seeking bit of the market, that isn't the machines that are there playing the relative price momentum algorithms. They're looking for differentiated and interesting stories, and stories that they can get their head around that resonate with what they see in the world around them. And so trying to find interesting stories where you've got credible management, a credible story that isn't a flash in the pan based on one news event or what have you, then I think that's the stuff that I look for. So I look for credible business plans, credible management teams, credible ideas and business, credible shareholder base. You don't want an entirely Robinhood shareholder base, but ultimately with a management team that can articulate what the story, what the opportunity is. And then I get shown, companies come to me the whole time. I don't get retained by companies. I'm happy to have CEOs subscribe to Nut Stuff, and I'm happy to take a look at their business plans and have them pitched to me. And if I think they have a good story, I'm happy to tell the story. But I think if the story is not good, I reserve the right to write that the story isn't what I thought it was. So we're pretty honest and we're pretty brutally honest about what
That's
we do.
cool. That's good. The newsletter is for the people.
The newsletter, I call it the democratization of finance. I think that's exactly I'd like to think that we are, with some of the company analysis we do, institutional quality research analysis and perspective for a kind of retail price. But as I say, again, it's really a curated narrative of the market. And when I don't have an interesting view or I don't have a differentiated view, I can normally highlight somebody who I've known for a long time that does. And so it becomes a sort of an aggregation of good views, opinions. But the whole idea behind it is where I guess what I do is I'm constantly selling the story of the market. And so I'm doing the sort of curated narrative of where the market's going. In some respects, I don't really care where it's come from. What I really want to know is where it's going.
Yeah, no, good. So can you share what's that one lesson you learned the hard way in investing that stuck with you?
I think it's the same as one's romantic life. It's falling in love with the wrong things. Yeah. And I think you can get taken in by a story. The power of persuasion can be very high, and having the discipline that when the story changes or the facts change to cut your position and move on.
Good. Good. So are there any big macro trends that you feel people may be missing right now that could make a major impact for them soon?
The answer is yes, of course. I think the biggest one.
Can you share?
Yeah, I think the biggest one probably, again, goes back to how I view the world in terms of this changing world where, the top 0.1% of the world needs to know what to do with their money when indebted governments want more of it over and above what they take in the form of taxation. And the disconnect of that with what I see as the whole emergence of this digital money and the world of blockchain and tokenization. And so simplistically, digital assets are, I think, 1% of global financial assets. And I see a very clear path to that 1% becoming 10%.
Really?
And that 1% going to 10% is, to me, going to be the five-year trajectory that is going to be huge. And so, again, that's not about the NFTs or the segmentation of nefarious stuff that we've seen before or meme coins. What it's going to be is the very clear tokenization of real world businesses that, frankly, as soon as you put these businesses onto a blockchain, they become more transparent, more honest. There's an incentivization model behind there, which is incredibly good for society. And ultimately, you take out a lot of the middlemen. And when you take out the middlemen, these ultimately you end up owning a token, which becomes a much more of a direct drive to the success of the business. And so I think you're going to have, I call it the parallel portfolio concept, which is that you end up with a portfolio of equities, you'll end up with a portfolio of tokens. And so I'm a huge proponent of where the tokenization blockchain world's going.
Can you name some companies that are utilizing decentralization?
Yeah, I think the best example of this probably would be Helium. Okay. So Helium has a token, the Helium HNT token. Helium started in a blaze of glory, I'm trying to think, 4 or 5 years ago, ended up having multiple billions of market capitalization. Helium today, because of the issues with regards to rollout of 5G, is a token. You can buy the Helium token. And what the Helium token and what Helium does is it helps the likes of Verizon and AT&T to expand, grow, and fulfill their footprint for 5G all around the United States. So Helium now has got the 4th fastest growth of any telecom company in America. And the reason it's doing it is because it has a brilliant model of incentivization, tokenization, that's ultimately improving people's cell phone service. Now, you as a cell phone user wouldn't even know you're using helium. All that happens is you would roam onto the helium network when when your existing provider doesn't provide you with adequate service. For the buyers of the helium token and for the users of helium and the deployers of helium boxes in a DeFi world, they're ultimately making money when you use your telephone. So it's a real win. It's a real win situation.
Yeah. And those are always good.
We like win situations.
Yeah, I like it. So if you had to break down investing into 3 simple rules for entrepreneurs who want to diversify, can you share what they would be?
I think you've got to have a clear goal, and your goal
Okay.
is down to what degree of risk you can take with your money. I think you have to have a process. I think you have to have a process by which you identify ideas and how you think about ideas and do the work. And then I think you have to have discipline. And I think the discipline is know when to buy, when to cut,
Yeah.
when to add.
Great. Oh, man. So great to have you on the show. And I believe we added some solid value in the market with what you shared. It's great what you're doing. Definitely. I tried to access the website through just FYI, I tried to access your website. If you want to repeat the website, we'll have it in the show notes as well. But try to access it on a mobile phone, but it wouldn't let me go past actually subscribing. But when I went to the desktop, I was able to check out everything. I don't know if that's on purpose or.
I think that's pretty much on purpose. We'll check that out.
Yeah. Okay.
But
Okay, great.
But basically, it's on the website is www.nutstuff.co.uk. I try to publish 3 times a week. I publish the fund on a Monday with a sort of a few thoughts that we observed over the weekend to set you off on the right track on the Monday. That I try and write on a Wednesday and a Friday. So I wrote this morning. That's typically a PDF. And then we offer people a month for free. You subscribe, get a month or a couple of months for free. It's very important to use it, get used to it, reading it, get into our head about how we're thinking, what our narrative is. And you should be able to do that within a month or a couple of months. And then it's a subscription model.
Okay. All right. Great. Thank you so much. Wishing you all the best and definitely keep in touch.
Thanks, Shahid. Appreciate your time.
In here,